Hi Ruma, I just wanted to know if I get a client, how do I pre-qualify them?
So pre-qualify for a purchase basically.
Yes.
Okay, all right. So because you're starting new, you're kind of a training broker. So I'll go with the very fundamentals of when you start with an interview, what questions do you need to ask, right? So can I draw something for you?
Yeah.
Okay. So there are, just to give you an idea, there are two pillars of a home loan, right? One is your borrowing capacity, which we call BC. You must have heard the term in the office, we call it BC. And the other one is FTC, which is funds to complete. These are the two pillars. If you have the borrowing capacity right, but you don't have the funds to complete, meaning deposit, etc., it doesn't work. Like, we have to go both the wheels in motion to get the train online. Yeah.
Okay.
So with the borrowing capacity, you know what is basic, like cash in and cash out.
Yeah.
That's the main formula. You know, all their income in and all their expenses out. So income, I mean, I'm giving you a very fundamental point of view, but at the end of the day, income can vary, and they could be self-employed documents, they could be so many other things, but I'm just giving you very basic.
Okay.
Yeah. Okay. So cash in is your income and cash out is your expense, right?
Yep.
Okay. So listen to that carefully, because I'm going to test you on that. Okay.
Okay.
And your FTC, which is funds to complete, is 4 types mainly. Now, one is the main obvious one, which is deposit. So let's say you buy a property $100 from me.
Yep.
Say for example, I'm the vendor and I'm giving you a property worth $100.
Okay.
So you're going to go to the bank and ask for, say, $80 for the loan. So $20 has to come from your pocket, right?
Yes.
So that is called deposit.
Okay.
Okay. That deposit goes to the vendor directly. Now, some clients ask me, they say, oh, we have to give that deposit to the bank. No. You're buying the property from me, 20 you're paying from your pocket to me as a vendor, and 80 bank is going to pay me.
Okay.
Which is like $100 all up.
Yep.
Right? So that's your deposit, $20 for example. Then the next one is stamp duty. So stamp duty is the cost. In New South Wales, it's 4% of the property value. So stamp duty is what you have to pay to the government. Now, being a first home buyer, you can actually get the exemption, and that's below 650,000. Whether it's a brand new property or it's an existing property, doesn't matter. And if it's a brand new property, then below 600 you even get 10,000 from the government, but you have to live in the property at least for 6 months.
Okay. So what is an exemption?
Exemption meaning you don't have to pay stamp duty.
Okay.
So if I buy a property, I'm not a first home buyer, I have to pay the government stamp duty. But if you are a first home buyer, then you don't pay stamp duty if the value of the property is below 650.
Okay.
Okay, that's the exemption. So let's assume you have to pay stamp duty, because I'm going to tell you what is the funds to complete. So stamp duty, this goes to the government.
Okay.
Government. Deposit goes to the vendor.
The vendor.
Yeah. Perfect. Okay. Then we have the third one, which could be lender's mortgage insurance.
Which goes to the bank?
Well, it doesn't exactly. Yes, it goes to the bank, but doesn't exactly go to the bank. So let me explain what's a lender's mortgage insurance fee. Let's say now I'm going to change my role. Let's say I'm a bank.
Yep.
You're borrowing money from me, and I have to, because I'm giving you so much money, I have to have some sort of insurance. It's just a normal insurance policy.
Yep.
So I'm a lender. It's my insurance, lender's mortgage insurance. The term says lender's mortgage insurance, right? So it's my insurance, but up to 80%, you as a customer doesn't have to pay that fee. But if you borrow more than 80%, then lender's mortgage insurance fee more than 80%.
Okay.
If you borrow more than 80%, then you pay that fee, which is my fee, to the insurer. But we put it in the loan. Sometimes in the loan, or you can pay it up front. I don't want to go into too much discussion about that. But if, let's say, you've got 90% loan here, then you pay your lender's mortgage insurance fee to the insurer through the bank.
Okay.
You got it?
Yeah.
Which I can explain later. Maybe we can do another YouTube clip later for that calculations. I'm gonna train you separately on that.
Okay.
We'll do it tomorrow or Thursday, right? Okay, so that's your lender's mortgage insurance fee, which can be added on top of the loan or within the loan.
Mm-hmm.
It all depends upon the bank, which bank we go with. Lastly, there's miscellaneous cost. Miscellaneous cost includes your some sort of tiny council rates, your solicitor's cost, your all that jazz basically. So it could be 2,000-3,000, not more than that. So these are the 4 types of funds to complete. Now we're going to elaborate it in the next training session, when maybe Thursday or Friday. I'm going to talk to you about how LMI is calculated, and what are the products who add LMI on top, or can you pay it up front and things like that. So we're going to go into that discussion, but let me just go through very basics right now, right? Okay, so if let's say there's a tick on the borrowing capacity and there's a tick on funds to complete, that means that the person can borrow the money they're looking for, but then there could be some property issues. There's a security, they call it. So let's say they're going to buy a property in high density meaning how in the city there's so many different levels and all that. That's called high density. The definition of high density is more than 30 units in one block, and maybe 3 or 4 floors depending upon the bank again. So that's security is also dependent. So there are quite a number of factors, but if you come across these 2 and you give a tick, that's the pre-qualification, just in a nutshell. But we'll continue with that in our next session. Any questions on this?
No, this sounds good.
All clear?
Yep.
Perfect. All right, let's do our next session next week.
Thanks.